Now we come to the cumulative delta, all right, and how to read cumulative delta. So there are a few ways you can use cumulative delta to your advantage in trading. The first way you can use cumulative delta is delta divergence. Second is cumulative delta jump. And third is cumulative delta shift. All right. We will look into the chart soon and see examples of all three. But cumulative delta divergence will occur when price makes a higher high, but cumulative delta makes a lower high. So price is going higher, it is making a higher high, but this cumulative delta it goes higher and then it makes a lower high. So there is this divergence. All right. The same is true in case of reverse. I mean, price is coming lower, cumulative delta makes a lower low, but then it makes a higher low and you get a divergence. So it's similar to, it looks similar to the RSI divergence or stochastic or MACD divergence. The logic is same. Only instead of using those indicators, you are using actual cumulative delta values. This divergence can also be plotted using simple delta. Divergence look much better on simple delta and easier to find than on cumulative delta. Does one divergence have any more significance than the other? No. Both divergences, the logic is same. You cannot blindly use them. You need to understand the context under which they are developing. If you nail the context, it will work. If you miss the context, it won't work. Then you will end up blaming delta or that indicator or whatever. But the real problem is that you are not grasping the context under which the market is developing. Then none of the indicators will work. Right. Then we come to cumulative delta jump. This occurs when the cumulative delta jumps suddenly or increases in value suddenly. Okay. So we saw that it is plotted in a candle format. So it is going lower, 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 and then starting to move higher. And suddenly one candle is big. And then again it starts forming lower. And then after some time, suddenly two candles are big, three candles are big. Again it, you know, slows down. So these jumps are not very difficult to spot on a cumulative delta chart. You can easily spot them. And once again, if your context reading is correct, these jumps can be very, very helpful in identifying whether we are entering a trending phase or not. Once again, context is the king. And if you nail this context, this delta jump can be a valuable asset for you. It is like an advanced warning of strength or weakness coming into the markets. You can use a certain filters as in other supporting indicators to filter out whether you should pay attention to this jump or not. All right. So we will look at that when we go to the example. And lastly, there is something called as the cumulative delta shift. This occurs when the cumulative delta shifts from bullish territory to bearish territory or vice versa. Now, what that means? Each day, the cumulative delta will start at zero value. Either it can move higher, it can move lower. But if the market is volatile or sideways or choppy, it can do something like this also. When it is clearly trading above zero, we say it is in a bullish territory. When it is clearly trading below zero, we say it is in a bearish territory. And when it is basically moving sideways on both sides of zero, we understand that market are in a sideways consolidation phase. Not to be, messed with, because there is no clear sign where it wants to go. Okay. Now, also sometimes what happens is, which happened yesterday, and I missed that. indication. But for multiple days, delta remains negative, and suddenly on one day it is very highly positive. And I mean, this is for day 1, this is for 2, this is for 3, and this is for day 4. Day 4 suddenly starts at 0 as always, but just trades above the 0 for the whole day, ignoring this trend over last 3 days of trading below 0. This is a delta shift, cumulative delta shift, where traders have completely shifted to buy mode. Again, it can indicate strong moves, all right? And it pays to keep an eye on these kinds of things, right? It's very easy. I mean, just look at the charts and it becomes very easy to monitor. It's completely graphical. You don't have to worry too much about the values and numbers. Just by looking at the charts, you can make that distinction. So above 0 is bullish, below 0 is bearish, and during persistent trends, cumulative delta tends to stay on one side of the 0 line. So for these 3 days, the trend might have been lower, and then on this 4 day, it suddenly shifts to the upside. This can just be short covering, we can fall back, that can also happen. But I'm telling you, this sudden shift in cumulative delta indicates that the strength has returned or the weakness has returned, and it is it is significant, and it can affect the markets for longer than you can stay solvent, or you can uh, the stay in the trade by keeping a wider stop loss. So it pays to keep an eye on these kinds of indicators. Is it really easy to monitor all these indicators all the time? Absolutely not, because I personally missed this shift yesterday. But it happens, and you won't become the best trader in the world in one day, 1 month, or say 6 months or 1 year. You'll have to keep at it. You'll have to try doing things in and out, in and out, in and out, and years on end, weeks on end, months on end. And only after that, you will be able to put this big picture together. All these signals will start jumping at you instead of you trying to find them. And that is when you will understand that your trading has turned for better. Okay. So again, associated conditions, that is the context, needs to be understood before relying on any of these informations. All right. So uh, yes, let us go to the example of cumulative delta. Okay, so this is your cumulative delta. Now, unfortunately, for order flow charts, we know that we don't have data for much beyond 2 days, 3 days. But for some reason, the delta is plotted for many days. And that is why it can be easily plotted on a bar chart. All right. Now, here you can easily see the shift. Okay. So, first, let us talk about the shift. We saw that this whole phase was characterized by sideways move. You can see delta was one day below, one day above, again it crossed below, horizontal near the this 0 line. On this day we went firmly lower and we got a trend day, and today we get this change in shift, that is yesterday. Suddenly we start at 0, but we are just moving higher. Signs of clear trend days. What happens here? If you look at this is a clear downtrend day. Look at the cumulative delta, lower, lower. One day it goes higher. Obviously, there will be days where there will be some short covering, pullback, short down again negative. Again, it moves sideways. Now, looking at these 3 days, you can start to appreciate that, you know, the strength of that delta, negative delta, is now reducing. You can see it is going higher. I don't say this is a divergence, but it is going higher. And then we get a shift, a follow through. And again, we move sideways. Again, there is nice delta staying above the 0 line. Again, we get an up day. But then, we start to get the picture that we are going to move sideways because there is no clarity. All right. And then this happens, and we think that we are going to continue with lower deltas, prices going lower. But then, boom, this shift happens. everything, every trader's plan is thrown out of the window, and now you are wondering what the market is likely to do going forward. This is how cumulative delta shift works. All right. Is it a indicator where you get clear entry and exit signals? No. But does it give you very, very vital information about the markets? Absolutely, yes. It pays a great deal to focus on these indicators because they tell you what is happening behind the scenes. All right. Now, if you increase it a bit, let me also increase the height for this. And now we will look at the delta jump. All right. So let us pick any day. Let us talk about this day. Okay. Now, what is happening? Obviously, this sudden shift is there, and you can see this particular bar where the delta jumped sharply. Okay. This is where you could have argued that today we might see higher prices for the rest of the day or a possible trend day. Okay. This happened on this bar, and this pullback you could have bought, and then you could have seen the prices going higher for the rest of the day. Every time the trend resumed, you can see there was a jump in delta. All right. So that is delta jump for you. Let us look at bearish examples. Again, you see, you start with nice negative delta, then very, very narrow delta is forming, then suddenly you get this jump, this jump, this jump, all happening in this zone. Now you know that the sellers are taking control of the auction. All right. So any pullback or any sign of weakness you get, you can short for continuation. Now, as I said, you need to put it in context. On sideways days like this, you get sometimes you get these delta jumps, but they won't give you any follow through. Right. So these delta jumps, they did not give you follow through. This one was probably a sign of exhaustion more than a delta jump, and you actually got a opposite kind of activity coming in. But you can see that if your context is right, you can actually use it. So on this day, we saw on the prior day that there was a lot of exhaustion. Okay. Then we are trying to stay above the VWAP, above the zero line. All right. Much lower than prior day's delta. So this looked like, buyers were not capitalizing on the fact that they are staying above the VWAP. Okay. And then suddenly on this bar, when it breaks below the VWAP, you get this delta jump to the downside. And you could have taken this trade, even this pullback, or straight away this trade, and you could have made some money on the downside. Again, what I'm saying is this an entry or exit signal? No. But if you keep an eye on these delta jumps, if you are planning a trade, it will add to the confidence. Maybe you are looking to buy and sudden jump to the downside occurs, you will be warned that okay, this is not the time to buy. I am not able to understand the market, I will stay away from it. If you see delta jumping above and below the zero line, you know that the market is in a bigger sideways phase. We need to wait for it to give us a clear cut signal, and it did give us a clear signal by this sudden delta shift on the last trading day. Now, what can happen? Tomorrow again we open and we can see again forming, delta staying on the positive side. This will be very good for the buyers. But if it forms like this or it stays below the zero, then it will tell us that probably this is short covering and the rally may not sustain for too long. That is how you start building your view on the market. It is not always about the precise entry or exit points. It is about understanding what the markets are trying to do and then figuring out low risk entry points where you can enter or exit your trades. All right. Now let me see if I can find any example of cumulative delta divergence, I was hard pressed to find one. In fact, I could not find one. So I believe it is difficult to find, cumulative delta divergence. However, if you are monitoring a simple delta chart, you will probably find more examples of delta divergence on a simple delta chart. All right. So let us look at a simple delta chart and see if we can find delta divergence examples. And here, you can see that we are getting multiple examples of delta divergence, like here, when the prices were moving higher, you can see in this zone, you got this delta divergence. Okay, when it was moving lower, making lower lows, you got this delta divergence. All right. So it is easier to find delta divergence on a simple delta chart, divergence chart, than a cumulative delta chart. All right. But you can also combine this. So let's say I am again adding another bell delta. This time I am adding it as a cumulative. Let us see what happens. Okay. Now I have, these things plotted where I know certain things about the markets, that if it is staying above the zero line, maybe the buyers have a better, grip on the auction. If it is staying below the zero line, sellers have a better grip on the auction. And then I can combine these two indicators to find good entry or exit trades. All right. Now, how can I do that? Let me find a good example of this where, I can avoid getting into a bad trade. So let us look at this particular day. So on this day, we start above the VWAP. Okay. Not too confident. But then this thing happens. This is a delta jump. All right. Then we go ahead, we try to come back down. We also get a negative delta jump. But then again, the prices start moving higher. And I'll have to slightly increase this. Okay. Make it visible. Okay. So you get another small delta jump here, another delta jump here. So that is happening in this zone. Now we are staying above the zero line on delta divergence. We are staying above the VWAP on the VSA chart. And we are seeing that both these indicators are telling me that the buyers may be in control. We have the delta jumps. All right. It is now telling you that don't go for any signs of weaknesses or negative delta divergences, at least for today, because we have such strong shifts and jumps in cumulative delta, as well as it is confirmed by prices staying above VWAP on normal VSA chart. So here some delta divergences accumulated, signs of weakness accumulated. We did not pay any attention. Again, delta divergence happened. Again, signs of weaknesses happened, but we just kept on going higher, higher, and higher. All right. Same thing can be observed on the recent day. Okay. So here, what you can see clearly, price staying above VWAP, nice shift, and then you get this jump. This is happening at this point. Now you start seeing negative delta divergences. But every time a negative delta divergence happened and every time the price went sideways, buyers came in and they bought. Why? You could have warned with this shift. Now, as I said, I completely missed this. Now, probably I will beat myself up for another hour or so once this session is over, that why I didn't miss this. But it happens. It was a very, very clear indicator of strength on this day. And now it might carry forward to tomorrow. So we will have to monitor both this cumulative delta and normal delta, and how we are trading with respect to VWAP. If at all we come down, if at all we come down, how we are going to treat this trend day VWAP. All these things we'll have to monitor and see, and then develop a context, develop a view on the market, and then look for low risk entry points and enter trades. Now, when you were not able to use negative delta divergence, any positive delta divergence could have been used to enter positions. Okay, because we were so strongly in this bullish territory, any big red delta candles or positive delta divergence could have been used to establish fresh long positions. All right, so you can use this information to improve your market understanding, to get deeper insights, as well as combine it with other tools and use it to find good entry and exit points. All right, so those were the examples of cumulative delta and normal delta